Welcome to another episode of Business Source, the show that gives you authentic conversations to help your business. There's no smoke and mirrors. It's just real people sharing their experiences. I'm your host, Lee Nightingale, and today we're going to talk about taking financial control with Stuart Hudson. Stuart Hudson is co-founder in AAG Wealth Management and also a chartered financial planner. So Stuart, thank you for joining us today. I'm really excited to hear your experiences from the last 6 months and some nice tips and tricks that you got for people. Welcome. Thanks for joining us.
Thanks, Lee. Appreciate the invite.
Fantastic. Now, of course, everyone, we have to do the age-old disclaimer that whilst we are talking about taking financial control, this is not what's considered financial advice, people. So don't base your future and current investment around the information we hear today. This is just two people having a chat about what we've experienced over the last 6 months and things that we've done as individuals, as people, as business owners, the responsibilities we have, the things that we've done with to help our members of staff, and just generally what we're seeing with clients and what they're doing. So again, this is not financial advice. So Stuart, with that, it'd be really great to just get a very brief overview of AAG, what you're about, your values, and the service that you try to deliver to your clients.
Yeah, sure. Well, again, thank you for having me on. AAG is a business has been around for the last 25 years. I'm actually in an office today, which has not been the case for a lot of the last months. But it's quite nice being back in the office, to be honest, just to break up, that working from home piece that we've all had to get used to. But as a business, we help as many people as we can with regards to their finances in a huge amount of different ways. Over the years, the business has grown and developed as clients become more sophisticated, do more different things, need more things, and we try to accommodate that. So really, if anyone's got a problem or a question with regards to their finances, we tend to be the first point of call, and 90 to 95% of the time we can help. There are some things we can't help with. If people want to do some exotic trading or derivatives or something that's slightly off the scale from a risk point of view, but in the main, we either help clients do it, or we've seen it, or we understand it, and so yeah, we become a useful resource to our clients.
Fantastic. And for clarity, you help individuals, and they don't have to be high net worth individuals. Individuals, real people that want to make sound investments where possible. Everything is a risk, we understand that, but as an individual, I wouldn't class myself as a high net worth. I'm doing okay. I might have a bit extra that I can afford to put at risk, let's say, because again, that's what we are doing when we're doing investments. So you deal with individual people like me, individuals that are fortunate enough to be in a position of wealth, but also, as I understand it, you help businesses as well with their employees. Is that right?
Yeah, so the majority of the work we do is with individuals and families. We can help anyone. My eldest client is 93. My youngest client is about 2 weeks old. Clients of mine had a little baby boy, and they wanted to put a couple £100 a month away to get him started on the right footing. So, and I've got a client bank, with a mix of ages, mix of age, mix of financial resources, a mix of understanding. I have clients who understand finances very well, but they just need help, getting it in the right sort of places. And I have clients who really struggle when it comes to finances and need someone's help. And I often joke when I'm doing seminars and webinars in front of companies, which I'll talk about in a sec, that when it comes to things like DIY, I'm terrible at it. Mrs. Hudson has a bit of a field day when I get involved. And so it's something I delegate. I get someone in to help me do all that DIY that I know I'm going to make a mess of. So We help a lot of different people with regards to their finances, but yeah, no minimums, no maximums. If you need some help, then we kind of get involved.
Sure. I think using that analogy, the key difference I would perhaps say with DIY is, if you hammer a nail into a water pipe, the water comes out, you call a plumber and he comes out and fixes it. If you have a go at investing yourself and it goes wrong, there is no one to call, I'm afraid. That money is gone. There's no
backup. No, that's the risk.
No safety net, exactly. And that's why you've got to be prepared to if you're going to do it yourself. And I'll talk about the personal investments that I make later on. But if you're not comfortable with taking that risk, then always go and consult somebody who can at least give you that legal proper advice. And again, whilst at the time it's just advice, it's down to you. You've got to make that decision and the level of risk that you want to take. Because of course you can take low risk but low return, high risk, potential high return. Depends on your comfort levels on risk. But there we go. I mean, fascinating, and we can go down a whole Alice's rabbit hole on that one for sure. But bring it back to
not advice.
No, exactly. Bring it back to your business and the last 6 months, thinking about, wow, the world's gone absolutely crazy, and everyone's income has taken a huge knock. I don't care which level you're at. If you are, fortunate enough to be a high net worth, that you're going to have taken a hit for sure. So I'm curious about what you've seen within your industry and your business about over the last 6 months and people's activity around taking that risk in investments.
Sure. Well, certainly, I think from a client perspective, when we talk to clients about building out a financial plan for them, we very much have the a long-term view on this. If you get too short-sighted in your view, and you can easily stress yourself out. If you're reading the papers every day, worrying about your own finances, it can be a pretty difficult place to be. So we try and keep clients with that longer-term mindset, really to help get through the noise and the volatility that exists in the markets. Our fund managers are buying businesses on the basis that they think they're going to be a good business for the next 5 or 10 years. They're not buying it to sell it in a few weeks' time or a few months' time. They're buying it to be a good, long-term, robust business. And we've seen over the decades that we will have shocks in the market, and it's about investors being comfortable and understanding that as part of the journey. So we'll have years where markets will go up, and we'll have years where markets will go down, and you've got to get comfortable with that journey. And whether it's COVID-19, whether it's the dot-com bubble, the global financial crisis, the Iraq war, there's always something that's going to be around. We've got a US election coming up in November, plus Brexit. There is always something that's going to create some disturbance in the market. But again, if you can keep your mindset that in 10 years time I'm going to retire and I need to keep putting money away for that goal, then you'll be in good shape. And try and stay out of the nitty-gritty day-to-day stuff that's just going to create stress for you and means you think about the wrong types of things, not the long-term goal, think short-term, and then perhaps miss out on other things like looking after your family or getting on with your own job and these kind of things. So it's a bit of an education piece for investors about thinking long-term, as very much our fund managers do.
Yeah, I can see that. I think let's not beat about the bush here. You and I, just for clarity's perspective, we're personal friends. Our wives know each other very well. We play golf together. So I'd rather be transparent in that way. When I think about people investing money, have I got it to lose? Don't I? But also in terms of how much to invest, when to invest, there's going to be people that are going to make a lot of money out of this situation. There's people that maybe do have that extra bit of money, that extra cash that they can invest, and do invest themselves, or choose to use someone like yourselves to invest their money, because there are stocks and shares out there that that have taken a significant hit. And if you take that longer term strategy, investing in the right companies in the right way can yield those longer term results, right? Because when you look at the stocks, literally, a lot of them are sort of doing this, some are doing this, and then come March 2020, literally everything went. And some now are gradually starting to see that little bit of a curve return. Whether you see a hockey curve, a U swing, or a W, there's all these different ways of analyzing it, but there is still the potential to make some money out there, so long as you understand that it's not going to be in the short term. Putting that £100, £50, whatever it may be, into something, into stocks and shares, ISAs, for example, which is something I'll talk about in a minute. But knowing that it's not, if you don't expect cash out of this thing in 6 months' time, 6 years maybe, but go for that longer term. So that's what I've chosen to do. And is that something you've seen people do? They're sort of switching to that stocks and shares, ISAs.
Well, certainly, the ISA wrap is extremely tax efficient. We recommend most of our clients use it where possible, and it's very accessible. If you need the money back, then you can get access to that money within a couple of days normally. Bank of England base rates on the floor, so you're not going to get anything for your cash. So if you've got medium to long-term savings goals, you just can't hold cash. It won't do anything. You'll lose against inflation every single year. So you've got to think about taking a degree of risk, and if you want to keep liquidity, an ISA is a great place to start. And we often talk to graduates and interns when we go into companies to talk about finances and getting off on the right foot, about using things like lifetime ISAs or Help to Buy, as was last year. You can get 20 grand away now in a ISA every tax year. Now, everyone won't necessarily be able to fill up that £20,000, but it's a great place to start and be tax efficient. So yeah, certainly an area for people to have in their mindset about where do I start. Great place.
Yeah, it's a sorry state of affairs when you have to say and acknowledge that if you left your cash in a bank, it would probably be worth less as time goes on, with all your fees and things like that, if you just left it. So you're better off stuffing it under the pillow. It's not going to lose money that way. Obviously, there's different risks with that, and I'm not advocating doing that, but it is a sorry state of affairs. And especially when, as individuals, we're putting our trust in banks, putting the money in there, and they are using our liquidity, our money, to loan to other people, and the bank's making money off that, making money off our money. So that's always been a frustration of mine, but that's a whole different conversation for another time, and I wouldn't expect you as a financial advisor to get embroiled in that conversation. But
well, actually, we always do recommend clients hold some cash as part of a good financial plan. You always want to be holding some cash, because if you have an emergency and you don't know what it is going to be, whether it's going to be you need to replace your roof or sort your car out, have an operation, you need to be able to access cash quickly. And so we always recommend clients hold about 3 to 6 months worth of expenditure as cash. And what that then means is you can start making better decisions on every other penny that comes into the account. If you know you've got that money separate and you can access it whenever you like, if you've done a budget and you've got that spare £100,
so for clarity there, people, Stuart's not saying 3 to 6 months under the pillow, perhaps saying an instant access savings account or something like that, right?
There you go, not under the pillow. Yeah, certainly just holding it as a liquid cash in bank accounts, societies, wherever it's going to be. Because then you can start making better decisions about that other £100 or £50 that you've got spare that month. Is actually, if you've got cash set aside, gives you peace of mind that you can fall back on, and you've now got £50. I can actually do something better with that now, because I can think about, I'm going to save for that car, that house, education, wedding, whatever it's going to be. I can then do something with that £50 and put it somewhere that's going to work.
Yeah, gotcha. So that brings me on to my sort of to my theories and what I've been doing. So I mentioned that I put my investments through yourself, my pensions are through in your company. So thank you for that. Life insurance, etc. But from a personal investment standpoint, you know, I started dabbling in stocks and shares, and started with the Plus 500 platform. And of course, there are other platforms available out there. But what I found was it was too short term. It was day to day, and I was getting so nervous watching those sort of share prices go up and down, and you end up watching the tickers, and it was stressing me out. And I thought, this is not for me. So, you know, I had some good highs with Forex trading, took it out, you know, had some lows, as you can expect. But yeah, it was just really stressful. And I decided to take more of a longer term view, as you say there, and went with Hargreaves and Lansdowne stocks and shares ISA, where I, you know, just put in a small amount each month and then choosing where I want to invest that, with the sound knowledge of I might look once a week at it. But I know, because I know the end goal is years and years in the future, rather than just, hey, have I made a few quid today? Have I not? So that's certainly how I've done that. And I know, you know, there's loads of different apps out there for people to choose, but and please only invest what you can afford to lose, because essentially you could lose it all. So again, this is not advice. Coming back to your business, how did things change for AAG come March, when we were all, everything's happy, you know, we're watching this thing from 1,000 miles away, and then boom, you got to send everybody home and the world changes. What did that look like for AAG?
Well, actually, it's a really interesting time. And obviously, we conformed to what was required of us as an employer. So everyone went home, worked from home. But funnily enough, the irony, we've been having discussions with our employees about could they work from home before Christmas, and could they start doing a couple of days from home. And, you know, we were a client-facing business, so we need to kind of be in the office seeing clients. And across the board, we actually thought that we're better being in the office. And that was the case for everybody, and we shouldn't make special dispensations for people in different roles. And so we had a bit of a hardish line that actually we'll work from the office and 5 days a week, and this is the working way. March came, and then all of a sudden we went and started working from home, you know, everyone through laptops or desktops, and client meetings through Zoom. And what came to pass was actually we realized that we could operate actually still relatively well, in fact extremely well, from home. Everyone was dialed into Zoom calls. Clients were delighted they weren't having to travel in. The back office systems all worked really well. I only had a few issues with my own Wi-Fi, but apart from that, you know, we were back up and running in no time. You know, testament to the team we've got here, you know, for getting all the tech in place. So actually, we were able to carry on, and, you know, clients get nervous at times of uncertainty. So when it came to the availability of the furlough scheme, we decided actually we're not going to make anyone furloughed in this business. We've got a large client bank that needs looking after more so than ever because of the volatility. And so by us furloughing people to save costs is going to impact how we can look after clients. So we're really keen not to do that, and to keep everyone motivated to looking after our clients.
Yeah, I mean, the last thing I guess I would want to get a sense of, if, you know, if I've invested my money in you, is you've sent everybody home, nobody's there to answer my call, I'm worried about what's happening to my money. Are people keeping an eye on the markets? You know, if they're furloughed, they can't be working, and so that's reassuring there, Stuart. Fantastic, and all credit to you for doing that.
And that's not to say that we didn't have challenges. You know, certainly, you know, we spend a lot of time thinking about our culture here. We're very inclusive. We encourage our staff to do lots of exams and upskill. We have quite clear career paths for them to follow. And we do quite a bit of training in the office as well for our team. Of course, doing that virtually is really tricky, and we found that probably the hardest thing to keep up the team culture, the team values, and make sure people were still improving and upskilling. It's really difficult when you've got 30 people on a Zoom call and you're trying to upskill people and find out what the feelings are. And we found that really difficult, to be honest. And I think probably We lost some time in that process where perhaps we weren't as hands-on as we needed to be. We weren't in front of our team as much as we wanted to be because of mixing of homeschooling and exercise and lunch with work. My working day, got decimated because of trying to homeschool 2 kids, building an hour and a half of exercise, have a break for lunch, a whole range of different stuff. Because 4 of us were at home rather than me sat in an office able to get on with stuff. So yeah, that's certainly a challenge for us.
Yeah, I was just going to come on to that on a personal level. It sounds like you did some fantastic things for your employees and instill confidence in them that they were going to be okay as much as you can. You have to be honest with people. We're going to do everything we can to have as little disruption as possible, and so you can carry on working. And we need to reassure people. That's all fine. But when it came to you, and you've now come from working in that central London role, traveling in daily, that daily commute, and now you're at home. The motivators are very different, and I say the distractions are very different. I shared on a previous episode here that I'm used to working from home, but the distractions for me were my wife was here, the nanny was here, we've got a 1-year-old now, so there's all that noise and kerfuffle and commotion going on that I wasn't used to. Even though I've got my separate office here, I'm fortunate enough to have that. I still found that hugely distracting. So how did it go down for you, as you say, with wife working from home and 2 very active kids, let's say, very lively?
The logistics of the household took a while to settle down. My wife was working non-stop. She works for a US software company, so she was doing a whole range of different hours on calls a lot of the time anyway. I had to build in my working day, which is a lot dealing with clients plus dealing with the team here and thinking about how do we maneuver the business to still be functional in lockdown. And so and then dealing with a 12-year-old girl who's homeschooling herself, which actually she did really well, but trying to run around after a 9-year-old, now 10-year-old little lad was very, very tricky and time consuming because he was at home and he didn't want to do his English or his maths. He'd rather just sit and watch telly or play or whatever it is. So that was a real challenge, and certainly a test on any parents' patience is spending that much time with their own children and trying to educate them and keep them alive and keep them fit and keep them well and fed. Big hats off to teachers because they do a great job with a classroom of 20 of these little lumps.
Yeah, because clearly you're a numbers man. You're in the financial industry, but when I've seen the homework of some of my family members, younger kids, I'm left scratching my head thinking, we did nothing like this thing at school, and I have no idea what the answer is.
Luckily, I can help on the maths department, and luckily my wife get involved in the English and the language side. So we're actually a pretty good balanced act.
Good. And what did the health side of things, so the mental health for yourself and the family, but the physical health, what shape did that take? What sort of activities?
Yes. So obviously we needed to make sure that the kids got regular exercise as we did as adults, because you've got to keep your mind in pretty good shape, and that does mean taking a break and getting out and about and getting fresh air. So we tended to get out and about. We did a lot of cycling around where we live in Surrey. We did quite a lot of walking with the kids and around some of the forests that we're lucky to have near us, and that was vital. We had to have breaks. There were times where if you didn't get sufficient breaks, and I've seen this with other clients, you just get drawn into staring at your screen for all day long. I'm in an office now, and the lighting is designed to enable you to sit and look at a screen for most of the days. We were sat at home with home domestic lighting, which probably isn't quite conducive to that. So it took us a while to get used to that, and building an exercise routine as well. I had a turbo trainer set up in the garage to try and keep me going there as well. It was tricky, real difficult balancing act.
And you managed to get on the golf course a few times, I imagine?
Well, when the golf course opened, yeah, absolutely. But it took a while for that to come through as well. But yeah, absolutely. As part of the work-life balance that I have, That is something that I hold quite dear, and gives me that time to be out of the office, clear my mind a bit, get a good walk and some fresh air while hitting a little white ball around as well.
Yeah, I did feel fortunate that that was a sport that I played and you played as well. That it was one of the first to be opened back up because of its ability to get people out in their fresh air, and you're not in close proximity to other people. Although at times when you look at the car park and on the first tee and then putting green for those first few weeks, while people were just sort of headless chickens that didn't know where to be, what to do, and the clubs themselves were figuring it all out. And how do we adapt to not have groups of people congregating in the car park having a beer after the golf, or 50 people on the putting green and a roll up ready to golf and all that kind of stuff. So that definitely had to adapt. The mental sharpness for me, I chose to do a couple of things. Painting was one of the things, and I recently shared with you a painting that I did. But reading is also something which I think all of us can do. Books, whether it be new or even used. You can go into your charity shops on the high street now and get books for next to nothing. But reading, I think, really does keep us sharp. It gets us thinking, and gives us ideas, new ways of doing things, new perspectives, and even reading controversial things, stuff that you disagree with, by authors that you don't really like because they say stuff that aren't to your core values. For me, that's how you become more knowledgeable, wiser, and can have better conversations with people when you understand different opinions on stuff. And that's why I'm currently reading The Future of Capitalism by Paul Collier. And, he's talking here about the polarization between the rich and the poor. It's getting worse, the rich are getting richer, and having that money to invest does make you richer generally, and you can make better decisions. You have the ability to make decisions about your financial future when you do have the money. And right now, the people that are less well off feel hugely squeezed. Their livelihoods have been taken away with this COVID situation. They're earning far less money or no money at all. And any money they do earn, they feel is just being taxed to the hilt, whether it be income tax, capital gains tax, VAT, all these different things. So it's an interesting one there. I guess the difference is to the average person, they're just trying to survive now. Just like we are in business, but talking about on a human level, I would say 90% of the planet, well, 99% if you believe the 1% are the wealthy, 99% are just trying to survive. Whereas there's still a sense of that 1% of tax dodging, or one might say being tax efficient, I think is the right way of putting it. So that's an interesting read. Lots of controversial stuff in there, and I'm pretty sure I won't agree with a good chunk of it. But it's definitely got me thinking. Launched in 2018, incidentally. How about you? Have you got any good books that you've been reading lately?
Yeah, I try and mix up my reading to a mixture of kind of business management strategy books, but also decent novel every now and again. So talking about this disparity of wealth, I'm currently reading a book called Shantaram by Gregory Roberts, which is brilliant. Based in Bombay, India. It's just fantastically written. It's a big old book. It's taken me a while to get through. But it's so well written. You do get a feel that you're in India with the smells and the colors and the culture and the dancing. It's beautifully written. And some of it is set in the slums in India, and you get a real good descriptive image in your mind of what it is like to live in these places. But the individuals and the way it's written is great. The individuals and the characters that the author talks about are just happy, smiley, lovely people who care about each other. So it's a really good read. And I love reading books about different cultures and different countries. So I think it broadens the mind a little. So Shantaram's a great book to have a look at. And the other one, The 5 Dysfunctions of a Team by an author called Patrick Lencioni. I don't know if you read it, Lee, but it's again a great book. He's written quite a few books about management, and there's some bits in there about how a team should function together well, and it's a bit about having trust, but also being vulnerable and being able to talk about the problems you have. Committing to the type of work that you're doing and being accountable. And I think certainly as we went through the last 6 months as a management team, kind of that accountability piece really shone through. That it's down to us to make sure this business survives. We keep the culture up and running. We look after our clients, and that comes down to us. So, and we can't shy away from that or start passing the buck or it's someone else's role.
Paul Collier makes an interesting point in here, because he talks about generally, as a human race, we need to be together with like-minded people. So that's why these metropolises and cities work well. And businesses sort of all congregate in cities, because having like-minded companies, like-minded people, when you're going out for lunch or socializing, you're socializing with people in the same that are in similar positions to you. That tends to breed more success, or people need that kind of interaction with people of a similar ilk. And of course now that's gone, whether it be for the medium long term, I don't know, but that's completely changed. And so it'd be interesting to see the next 6, 12, 18 months and beyond, how that, what effect that has on people. Because especially if you think, if you're in a sales environment, you bounce off other people, right? You need that camaraderie. You need to be in that office space, listening to conversations of people next to you. Hey, I've not heard that said that way before. I'll use that. So whilst it might be okay for people like finance and and operations to be working from home, I get the sense the picture for the future is going to be more salespeople together in an office, which then lends itself to, well, what is the world going to do with all this office space that isn't going to be used? They've built all these metropolises with all this office space, which now isn't going to be populated, perhaps even 50%, 60%. Who knows? I'd like to see that turned into more affordable housing, for example, to try and help solve some of the housing crisis.
Yeah, it's an interesting one. How much of this office space? I think when it comes to mainly retail and industrial units, they'll keep operating. The deliveries is gone through the roof for the likes of Amazon. But when it comes to office space, it'll be really interesting as to how this is going to pan out. Because I do think there'll be a reduction in the number of headcount that go into office space. But as a responsible office, a bit like we are here, do we have to have more space per head? So actually, from an office that would, let's say, fit 1,000 people in, if you're now only going to put 500 people in, are you going to still need the same amount of space? Because you're going to have to spread everyone out a little bit more. Or even for 250 people, do you need the same space for 1,000? Right. So that's going to be really interesting to see how people get back into the office and whether they continue on with that cost base. I was reading an article the other day again about how companies might start looking about using their office space much better and thinking about their well-being of their employees. And so could you have a health studio or a yoga room or whatever it is, a library? So actually in your working day, you can go and take a bit of time out, read a book, have a break, do some exercise, keep fit and well, keep the mind going in the right way. And that becomes, what does an office now look like?
Absolutely. And my final point around that sort of thing is more around, there's a temptation as a business owner to say, well, okay, well, if I've proved that my business can run remotely, do I actually need those people to be in the UK? So there's a temptation for offshoring and using offshore skills, which adds to diversity, adds to sharing the global economy. But I think right now, we need to be looking after the people we've got and making sure that there's job security for them. I think the minute we start to try and say, well, all right, well, we've proved your job can be done remote. Thank you very much. We're going to outsource your role to another country. You know, that's I'm certainly not advocating that. I mean, my business does use offshoring, but that was pre all of this, and that's just it's just part of my team is offshore. Some you know, we're a global company, and we've got resources all around the world. So I haven't made that decision because of this situation. It was part of my strategy beforehand. So yeah, fascinating point. I guess in closing this, Stu, what do you think the next 6 to 12 months look like for you and your business? What sort of strategies and plans are you putting in place?
Well, we're still, you know, keen to grow AAG. We're still going, you know, so we do some corporate work as well. So we'll go into companies, which used to be going and doing physical seminars and talking to their employees about finances, and for them to take a bit of control and just some hints and tips on how they can improve. And we've still been doing that, but just virtually, which seems to be working. I did one just yesterday. So we're still looking to continue to grow the business. We've actually got, we recruited someone who's starting next month, who we had 3 Zoom calls with. Haven't actually met them face to face.
Wow,
So,
yeah.
you know, slightly different view for us. But we're still looking to grow the business. People still need help, you know, going through difficult times. You know, there's about 3.6 million people about to come off the furlough scheme. Whether they'll all go back into employment or not, we'll have to wait and see. You know, they'll need help with their finances. We'll probably have a budget coming up at some point in the next 12 months. November's one's been deferred. You know, that's going to change the tax rules, because we need to, you know, the UK need to basically earn back some of that money that was spent on the furlough scheme. So there'll be tax changes coming up that people need to understand. So, you know, there's still a big requirement for people to understand their finances, and you know, we need our own finances to, you know, to live off, to retire on. You know, so it's really important for us to, you know, to keep thinking about the financial piece. So yeah, we'll keep growing bit by bit. You know, there's more clients who need looking after, that's for sure, and things will only continue to get more complicated with tax changes. We've got a budget, Brexit. There's always something. So you know, we'll carry on and keep supporting our clients.
Fantastic. I mean, the Brexit one's definitely one for another day, another week, maybe another year or lifetime. Who knows? Stuart, it's been fantastic chatting with you as always. Some great concepts in there, some things that we can perhaps use in our daily lives. Again, this hasn't been financial advice, so please don't base any of your investments on what you've heard from today. But you know, if you want to set some money aside for that future, think long term. You know, there are ways in which you can reduce the risk of losing your money. Speak to a reputable financial advisor. Thanks very much. Connect with Stuart Hudson of AAG on LinkedIn. Follow his posts and his business. I've been Nightingale, and thank you very much for joining us on another Business Source.